G'day everyone, welcome back to Pete's Investing. Today is May 16, 2023. This is the Bitcoin price update. Our indicator, which combines a triple moving average of the price chart and the CCI 150, is showing a neutral stance, so no trade should be taken primarily if you want to be really conservative. You'll notice also on the daily it's showing a neutral positioning. So let's just quickly show you what that looks like on the weekly. So what we look at is the weekly moving average of the price chart, 3, 5 and 60. We combine that with the CCI 150 and moving averages 5 and 50 of the CCI 150. And if they're aligned, it shows in a long position, it shows a bullish signal. Otherwise, if they're in a short position, it shows a bearish. And where it's flat, neutral positioning. So avoid, primarily, if you want to be very conservative about your trades, make sure the weekly and the daily signals align. On the daily, as well as that, it shows a neutral. We also look at the key resistance support areas. So on the support here at 19.55 versus a resistance at 31. So you can see there it's actually come up and bounced in the range between the 38% Fibonacci retracement. And it's bounced off that more recently, and it's making a bit of an upswing. Although it's still in this little channel between these two diagonals, and so it's a descending channel. So, and also I've got this other ascending diagonal. So if it does break through this upper descending channel trend line, it may actually rest on that other one. But ultimately to be bullish, we want to see it break this resistance up here at 31, as I said. So that's the daily. Before I leave the daily, I just want to quickly give you a quick recap on some divergence that have played out nicely. We'll go back to this one here. You can see there was a bullish divergence on the CCI versus a bearish divergence. And actually the price did break to the upside, and then there was a bearish divergence on that one versus a bullish divergence, and that also did break to the downside very briefly, and they were currently sitting in this bearish divergence versus a bullish. Now the way you would trade or read these, and again I'm not telling you to trade this, I'm just giving you some trading ideas. More closely looking at this one here first, we draw a channel between those highs where that bearish divergence was occurring, and whenever it breaks outside of that channel, which it did there, you could possibly have taken that trade going long at that point. And where you would typically place a target, you go from the previous high to the recent low. So for example, let's look at that Fibonacci retracement. So if you had gone long, say at that point where it broke above the channel, you would have taken a trade. So you entered there somewhere, you would have exited somewhere around the 50% retracement level. So you try and pick a Fibonacci retracement above where you entered. So if you had gone long there, you would have taken an exit or an exit target at around about the 50% level there. That same logic applies for all these as well. So where you go short here, you see that's playing out short. Again, you draw a channel between those highs, and when it breaks below the channel, you would have gone short there. And again, putting a Fibonacci retracement from that high and low. You can see there more closely, had you gone short there, you would have taken an exit around the 50% level. Now, don't get too ambitious, because you can see there it broke the 50%, went a bit below, then it bounced from there. And then we're currently now sitting in this bearish scenario of a bearish CCI versus a bullish. Let me just delete some of this to make it a bit cleaner. Lastly, I'll just demonstrate this on the daily. If we draw a channel between those highs, it didn't work. And that channel there. So again, the CCI is telling you to go short. You take it when a channel breaks out, so you go short there. And again, notice it just missed the 50%, the 38% level. Had you drawn a Fibonacci retracement from that low to that high, it missed the 38% level, but it did hit the 38% level at this point here. So a few days later. So again, can be a bit risky, but you have to know how to trade it, and it can be done. That's on the daily. So if I show you the hourly, we're currently in this bullish divergence on the CCI versus a bearish divergence. Now, you'll notice there has been a bit of a bounce, but where are we today? If I drew that channel using the same method, and we bring it up to that high there. So theoretically, if you had gone long there, we're still in a trade. Now, let's just draw a Fibonacci from that recent high to that low. So had you gone long there, you could possibly have placed a target at the 50% level, and we're currently not hitting that target. So you may have, we're not sure how if it's played out there, because it could well bounce from here as well. Notice the CCI is still trending up, although it is breaking down on a smaller levels there, on a smaller moving averages. So this could be still a very slight bullish trade in the play, possibly. But as putting the divergence aside, I've also got up here a back test, which is uses the moving average of the price chart, the moving average of the CCI, as demonstrated by the daily and the weekly. You would only take, again, this is running through the whole time period, and you can see there that all these trades are made. Where there's multiple contracts entered, like in these areas, it means it's doing an average down approach. So again, and that's running through the whole time period, but I prefer to take it when both the weekly and the daily are aligned in the same direction. Then I would take that trade, and generally we don't need to average down when that happens. So to understand this and other trading ideas, reference the links in the description below. Subscribe and support us on Patreon. We do weekly stock scans, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in the next video.